how close to war are we getting? And from your point of view as an American sitting in Thailand, watching Trump, kind of he's a friend of mine, but he's a bully. He wants to get what he wants. But are we pushing to war, or is that too far pessimistic?
I'm very worried about U.S. national security.
Hello. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And my God, lately, there's been more bad news than anything else. But as y'all know, bad news can be good news for the entrepreneur or the person who can spot the changes coming in the world. So I have a longtime friend, Richard Duncan. He's an American by birth and all this, but he lives in Thailand. And Richard is an economist, and I came across him because there used to be a bookstore called Borders Books, and they're out of business now because of Amazon. But anyway, I found the dollar crisis there. And that's why we have Richard today. I've known him for 25, 30 years now. And I want to talk about the dollar, what it means, because Richard lives in Thailand. So he has a macro view. His podcast is macro. You get the bigger picture on the world right now. So, and as we all know, we have the California fires. There's no, a lot of people don't have insurance. Can they rebuild? Our banks are in trouble. So there's a lot of bad news, but also I want Richard to give us a macro view of what's happening in the world, and maybe you can find the silver lining. So welcome to the Rich Dad Radio Show, Richard. Long time we've been talking about this stuff.
Robert, thank you. It's so great to see you. Thank you for having me back.
Real quick question. Please give us your background. I know you went to Vanderbilt, I think, or something.
That's right. I went to Vanderbilt, and when I finished Vanderbilt, I was really lucky and got to backpack around the world for a year. And during that trip, I saw Asia. So I first saw Thailand and Malaysia and Singapore 40 years ago, and it was already booming economically. So I realized, go east, young man. So I went back to business school for a couple of more years at Babson College near Boston. And when I finished that, I flew to Hong Kong and found a job as a securities analyst in Hong Kong, doing research on the listed Hong Kong companies. And so I've been living in Asia most of the time since then, as a securities analyst, an economist, a strategist. I worked for the World Bank in Washington for a couple of years, and I was global head of investment strategy for ABN AMRO Asset Management in London for a couple of years. And I've written 4 books. Your favorite, my first one, The Dollar Crisis, and most recently, the Money Revolution, How to Finance the Next American Century. And I have now my business is Macro Watch. I have a video newsletter that I publish every 2 weeks describing important things happening in the global economy and how that's likely to affect everyone's wealth.
And that's why you're a welcome guest on our program, because not only do you have the Macro Watch, but you live outside of America. You're an American, and you can watch and see the insanity going on all over the world. So I have a couple of quick questions. You live in Thailand. What do you know about the Chinese economy? They had those empty cities and all this stuff. And we hear in the States that the Chinese economy is hurting. What do you know for sure?
Yes, so I've been following China very closely at the macro level for a couple of decades already. And it is true, China's economy is in a very serious crisis. But that doesn't mean it's going to collapse tomorrow and completely disappear. That's certainly not the case. But their economy was driven by 2 main things. The first, by exporting more and more to America primarily, so export-led growth. And secondly, by building literally millions of high-rise buildings. And now they've gotten to the point where both of these growth drivers are just slamming into a brick wall. America's not going to take any more of their goods. So the U.S. is putting up higher trade tariffs. So China's exports to the U.S. are beginning to fall. And at the same time, they have such an extraordinary property glut over there. They say that, people are saying that they probably have 2 apartment units for every person in China. So they don't need to build any more apartment units. The prices of the apartments are dropping, and that's where people store their wealth. So they say that $19 trillion of wealth has been destroyed in China because of falling property prices. But it goes so much deeper than that because for so long, so many buildings were being built, and that required lots of construction workers, lots of cement and steel and tile. And so all of those industries expanded exponentially. And now
Right.
they're all just crashing because there's no need to build any more buildings. And finally, to put the icing on the cake, China's population is shrinking. They have absolutely catastrophic demographics. By the middle of this century, there will be somewhere like 150 million fewer Chinese people than there are now. And by the end of the
150 million?
century, 150 million fewer Chinese by 2050. And by the end of the century, there are going to be 500 fewer million Chinese people just because they had a one-child policy for so long. Now they've loosened that up, but people don't want to have any children. And so their population is just crashing. So they're stuck with this massive excess supply of property, falling property prices. No one wants to buy their exports anymore because China's destroying everyone else's manufacturing bases by subsidizing their own products and selling them cheaply. And so trade tariffs are going up all around the world against Chinese goods. And so China's economy is just going to stop growing altogether. They'll be lucky if what happened to Japan happens to China. That's the best case. What happened to Japan is in 1990, their bubble popped, and they haven't grown at all since 1990. And if China just stops growing and doesn't grow at all for the next 30 years, they'll be very lucky. It's probably going to be a much harder landing than that.
Okay. Well, so let me get the whole world to cover here. Again, Richard, he's my man because Richard Duncan, he has Macro Watch and he sees the whole world. But what I like about him, he's an American living in Thailand. And so he's not jaded by the American press here, but you have your own problems there. But when I look at Germany, I saw this picture in The Economist. They had the German economy on the back of a truck, and it was Europe was crashing because Volkswagen is closing plants and all this. The car industry is dropping, and then I guess this, I think I could be wrong. Germany tried to go woke. They went, they got rid of nuclear and all this other stuff, and then their cost of energy went up and all this. So it's Germany, which is the engine, in my opinion. I'm not an economist like you. Germany has been the engine of Europe. What's happening to Germany and France now? What's happening there?
So Germany in particular is in serious trouble too. They used to be the strongest economy in Europe, and now they're one of the weakest. They made the big mistake of relying on Russian oil and Russian gas. And now that the Ukraine war is underway, they've been cut off from all of that cheap Russian gas. And so now they have to buy expensive imported energy. And that makes all of their manufacturing operations much less profitable or very much less competitive than before. And at the same time, Germany relied very heavily on exporting to China. But now China is starting to export to Germany. Germany used to sell China a lot of Mercedes, Benz, and BMWs and all of their other cars and made a lot of money that way. But now the Chinese cars are so good. China has developed these electric cars that are the best in the world and the cheapest. And so not only are the Germans not able to sell their goods in China anymore, but now the Chinese are selling all of their cars in Germany and all of their other cheap products. And if Germany doesn't put up trade barriers to keep them out, there aren't going to be any more German car manufacturers left in a few years' time. So Germany is going to have to put up trade tariffs against China as well. So, and Germany also has a declining population, although it's nothing as severe as China's. So Germany is facing very, very hard economic times as well.
So what's happening to Jolly England? I mean, they tried to sell their guild. A guild is a bond, I guess, right?
That's right. It's a government bond. Yes.
So what's happening in Jolly England?
Well, they decided to leave the European Union, and so their export economy is quite bad. and all of the inexpensive labor who used to come and work in England from Poland, for instance, they've all gone home. So wages are high, and this has been inflationary. And the government debt has gone up very sharply, and people are reluctant now to continue buying English government bonds. So just in the last couple of weeks, the yield on government bonds has shot up to the highest level in decades. And people are afraid that they're about to have another debt crisis the way that they did at the end of 2022. At that time, yields on their government bonds shot up so much that the Bank of England had to jump in again and start creating money and buying government bonds and pushing up their price and holding down their yields just so that they wouldn't have a complete meltdown. And so there's really quite a bit of concern that that's possibly going to happen again, although it doesn't seem as severe this time as it was a couple of years ago. But their economy is very weak. They've hardly grown since COVID, despite much higher levels of government debt. And there are no clear growth drivers for them in the future.
And so when the last year, being an American living in Thailand and an economist, what is your view on the American economy?
So the American economy has been extremely strong in the last couple of years. But the reason is that the government budget deficits have been so large. First we had the stimulus during COVID. Government debt jumped about $5 trillion in the first couple of years of COVID. And the Fed created $5 trillion of paper money out of thin air to finance that government borrowing. That was a massive jolt of stimulus, but it didn't stop there. Even after COVID was over, the budget deficit has been $2 trillion a year for the last 2 years. And this has had an extraordinary impact on pushing up the stock market and housing prices.
Let me ask this question, because you're the economist, I'm not. Is U.S. economy strong because they printed so much money?
The U.S. economy is strong now because they printed a lot of money and because the government borrowed a lot of money and spent it. And that made the stock market go up.
Right.
So over the last 5 years, the wealth in the United States has increased by $50 trillion in 5 years. That was a 40% increase in wealth. $50 trillion in wealth. The whole national debt, the government debt's only $36 trillion. So wealth in 5 years has increased by enough to pay off the entire government debt with $16 trillion left over. But the problem is it's a bubble. The asset prices are very high. Their PE multiples, the wealth to income ratio, everything is very inflated. And if they start spending less government money and trying to reduce the government debt, that's going to pop the bubble. So if DOGE, the Department of Government Efficiency, if it does succeed and cut government spending, then it's going to hurl the U.S. economy into a severe recession that's probably going to cause a big stock market sell-off. And that may force the Fed to jump back in and start printing money again to push things back up, as they normally do in crises.
I have tremendous respect for Richard because his macro watch, I would subscribe to macro watch because Richard is unbiased. He just sees the world as he sees it through an economist's eyes. But when we come back, we're going to take a break. But every time I've had Richard at one of my seminars to speak, I had to put people on suicide watch. But being a pessimist like I am, I always see bad news as good news. What can a person do? So we come back with Richard Duncan. Again, his business is Macro Watch. First, really quickly, how do they subscribe to Macro Watch?
Thanks. So yes, they can find Macro Watch on my website. It's richardduncaneconomics.com. That's richardduncaneconomics.com. And if every couple of weeks I upload a new video, and if they'd like to subscribe, click the subscribe button and use the coupon code CRASH for a 50% subscription discount. You'll find that very inexpensive. And I'll keep you posted on everything that's happening in the global economy at the macro level and how it's likely to impact your wealth.
Yeah, I'll make sure you have a strong heart and strong spirit when Richard talks, because I love having Richard on, because being a pessimist, bad news can be good news if you know what to do. So we'll be back with Richard Duncan, and a long friend for over 25 years now. So Richard, we'll be right back.
Hi, folks. Rich Bontrager for the Rich Dad team. And let me tell you, I can be more thrilled about the landslide win. Donald Trump is back in office, and we've got both the House and the Senate in our corner. That's huge. But let's get real for a second. While the victory is sweet, the challenges we face as a nation are nothing short than monumental. We've just come out of 4 years of economic chaos. Think about it. The dollar has lost value. Inflation runs rampant. Interest rates are through the roof. Our national debt is out of control, and wars rage around the globe. Donald Trump has inherited an economy that's a total mess, and the burden to rebuild it is immense. Now, let's be honest, this isn't going to get fixed overnight. And even as we work to restore order, the cost of rebuilding will be steep. Printing more money to address the issues, ongoing assaults from BRICS nations on the dollar, and even climbing national debts are massive concerns. Here's the deal. Your savings aren't in the clear. They're vulnerable to these uncertainties. And let me tell you, gambling with your wealth right now is not an option. In these last few years, that taught us anything, that we need to take action, proactive steps to protect what we've worked so hard to earn. That's why Rich Dad is partnering with Allegiance Gold, a company that we trust to protect your financial future. Gold and silver are timeless ways to hedge against economic chaos. They're not just investments, they're peace of mind for your wealth. Here's the kicker. When you start your investment with Allegiance Gold today, you'll even get free silver as part of their exclusive offer. Just mention Robert sent you, and they'll take great care of you. Folks, now is not the time to sit on the sidelines. Act today. Secure your wealth. Go to protectwithrobert.com or call 844-3-ROBERT. That's 844-376-2378. And let them help you get started today. The average time to hire for most organizations is 30 to 45 days. Are you tired of the costly and lengthening hiring process? Simplify and speed up your recruitment by using the experts at Express Employment Professionals. Reduce time to hire, cut down on multiple interviews, and lower your recruitment costs. Whether you're looking for contract workers or new team members, our streamlined recruiting, candidate screening, and hiring process is more efficient than hiring on your own. Visit expresspros.com today. Haven't used a staffing company before? We know that you enjoy learning new things and keeping up with trends and efficiencies. Make a change this year with your hiring. Businesses are navigating a landscape that has never been more expensive or regulated. Start at expresspros.com to find the location near you. With more than 860 locally owned offices, you'll get the hiring support that you need at expresspros.com.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. Our guest today is Richard Duncan, longtime friend. I came across his book, Dollar Crisis, and which really resonated for me because I don't trust the US dollar. And Richard, on top of that, is a macro economist. He lives in Thailand, and his viewpoint on the world is pretty unbiased, yet caustic. And every time I've had Richard come to my seminars in Phoenix, after he spoke, I had to put people on suicide watch because Richard doesn't hold back as to what is not working in the economy. And I was talking to Richard. I was in Thailand in '96 after the Thai baht crisis. And some of the best real estate in the world in Bangkok was really, really cheap. So my point here is Richard gives the bad news, but it's also good news for the entrepreneur. If you know what you're doing, if you can play your cards right and all this. So Richard, this guy Trump, he's a good friend of mine. He's talking about tariffs. What is your point of view on tariffs, on whatever he's trying to do?
Well, so I can tell you, if he said he's going to put 60% tariffs on all the goods coming from China and 10 to 20% tariffs on all the goods of all of our trading partners. Now, this is going to be a disaster for China's economy because, as we've already discussed, China's economy is already in a severe crisis because of the falling property market. But if he were to, just for example, if he were to put high tariffs on Chinese goods, and not put tariffs on any of the other countries in the world, just China, those high tariffs on Chinese goods would mean that China would be able to sell much less to the United States. So China would be much poorer. And China then would buy far fewer goods from Thailand and Vietnam and Germany and the United States and all the other countries in the world. So that would also depress the economies all around the world, just if he only focused on China alone. So that's what has all of the Asians very worried. And not only the Asians, of course, the Europeans and the Mexicans and the Canadians. So if that's a concern because of that reason, but also if there are higher tariffs, that means that the cost of goods in the United States are going to go up. And if the cost of goods in the United States goes up, there'll be more inflation. So recently, the Fed has been cutting interest rates. But if inflation starts to pick up again because of tariffs and because of deporting a lot of workers, then the Fed's going to start increasing interest rates again in the United States. And that's going to be disastrous for the stock market because the stock market there is so overinflated already. $50 trillion of wealth has been created over the last 5 years, a 40% increase in wealth. It's very bubblish. And tariffs could be the pin that pricks that bubble and brings about a very significant correction in 2025. Bond yields are already moving up very sharply in the US as well as the UK. We were talking about the UK earlier, but just over the last few weeks, the 10-year bond yield has shot up to almost 5%. It was expected to go down because inflation has been dropping, but in the last 3 months, it's moved up sharply. And because it's moved up, the dollar has moved up very sharply. And that's not what President Trump is hoping for. President Trump is hoping to make the dollar weaker so it'll be easier for American companies to sell their goods abroad. But right now, there's fear that there will be higher inflation, and so the dollar and 10-year bond yields are moving higher. And if bond yields are moving higher, that means mortgage rates are going higher. With mortgage rates going higher, that's going to weigh on the property market.
This is my question.
All of those things are related to tariffs in an indirect way.
I'm going to be in Vancouver, British Columbia this week at the VRIC, Vancouver Resource Investor Conference. And there's a guy named McGregor is going to speak out there about how close to war are we getting. Because as you know, Richard, money and war go hand in hand. And you threaten China, and you have our fleets all over the world. How close to war are we getting? And from your point of view as an American sitting in Thailand, watching Trump, kind of he's a friend of mine, but he's a bully. He wants to get what he wants. But how are we pushing to war, or is that too far pessimistic?
I'm very worried about U.S. national security because even though China's economy is having a property crisis, that doesn't mean that China's government is slowing down its extraordinary surge in investment in new industries and new technologies. That's why they dominate electric cars and batteries. That's why they have hypersonic missiles and we don't. That's why they had 5G for several years before we got 5G. They are overtaking us technologically. And if they overtake us technologically, they're going to overtake us militarily. And this is happening very quickly. You know, this is what was happening in Germany in the early 1930s. Winston Churchill warned the world that Germany was industrializing and was becoming a very serious threat. Well, we're past that point with China now. China is neck and neck with us technologically. And if we don't respond by ourselves in the United States, investing more aggressively in new industries and new technologies on a very large scale, then we're really in danger of being conquered by China in the not too distant future. And so that's why I was so excited when President Trump announced on September 6th in a speech at the New York Economic Club that he was going to establish a U.S. sovereign wealth fund to invest in new industries and new technologies. And the main reason for doing that is because we could produce technological miracles and breakthroughs and ensure that China never overtakes us technologically. And meanwhile, that sort of investment would turbocharge US economic growth and allow us to grow out of our economic problems. Rather than it being sucked down into depression, we could have a major economic boom if we invest aggressively in new industries and new technologies. And so that's the policy of President Trump that I'm most enthusiastic about, establishing a US sovereign wealth fund. Yes, I'm very worried about China, and every American should be. And that's why they should get behind this idea of the US government financing a multi-trillion-dollar investment in the technologies of the future. That was what my most recent book was about, The Money Revolution, how to finance the next American century, how to drive the economy forward. We don't have to just grow at 2% economic growth a year. We can rev up the economy and make it grow at 7% a year. America doesn't have to be a declining superpower. The first American century doesn't have to be the last. We have the resources to invest in our future and turbocharge economic growth and create such extraordinary technological breakthroughs that will rule the world for another century and beyond.
So that's macro. And again, it's Richard Duncan. His Macro Watch. I highly recommend subscribing to his work. But what can the ordinary person do? Like for me personally, since your first book was The Dollar Crisis, I don't know if it was the first book, but I read The Dollar Crisis. I never trusted the dollar. So I have gold and I have silver. I have a gold mine in Utah. I had a gold mine in China, but they confiscated that one, so I don't like China's anymore. I bought a lithium field in Canada, and I'm a resource guy because that's what keeps going. So when you look at gold, silver, and now today Bitcoin, what are your opinions of that as hedges or as insurance against a dollar that might be coming apart?
So I wrote The Dollar Crisis in 2002. And at that time, gold was under $300 an ounce. So the dollar has lost more than 95% of its value against gold since then, I think.
Yeah.
And over the next 30 years, we're probably just going to see that trend continue. So I am a big believer in owning gold, and silver and gold more or less move together. I'm also a big believer in owning land, especially land with rental property on top of it, like a house. So you can buy the land, and land is as good as gold. They're not making any more land. So if gold goes up, land will go up. And meanwhile, you can have the rental income from your house every month. And if you have a mortgage and we have higher inflation, which is a real possibility, the higher inflation will eat away your mortgage and destroy your debt in a good way. And you'll become richer that way. So all of those things are things that normal Americans can do.
So ladies and gentlemen, this is why I trust Richard Duncan so much, is because he'll tell you straight. And like I said, every time he came to our conferences and spoke, we had to put people on suicide watch, but everything he says is coming true. Well, because, I'm a gold bug. And exactly this at around 2000, England Guy Brown dumped a lot of gold, and gold was pushed down to about 300 an ounce. So I bought a ton of gold coins, and then I just cashed it in I bought it for 300. I sold it at around 2,900, and I bought apartment houses with it. But that's what I do. I stay within what I know. And then I bought Bitcoin at 6,000, and I just kept buying it. And today I've probably a couple of million in Bitcoin. But I agree 100, Richard. It goes down as fast as it goes up. And so I was talking to a guy the other day about Bitcoin, and he says, "Oh, what happens if it crashes?" I said, "You better not be in Bitcoin, because he doesn't have the stomach for it." So anyway, the other thing I was laughing about was Rich was in Thailand, like I said. I was there for the Thai baht crisis in 1996, and there was a hotel for sale, and I kept looking at it. But when things are really bad, it's hard to see the good, if you know what I mean. And so the realtor was trying to sell me this big, beautiful hotel in downtown Bangkok, and it was only like $4 million. And I kept looking at it. And I gave up because I couldn't make heads or tails out of it. And so the realtor called me about a year later, and he says, some entrepreneur went in there and he says, the trouble is you're trying to rent it as a hotel. Instead of renting the hotel by the day, he started renting it by the hour, and the realtor says he's making a fortune. So I know that's not the most politically correct thing to say, but what I'm saying is that I listen to Richard because there's always something good in the bad if you pay attention, right?
No, my education in bubblenomics was exactly here in Thailand. I lived in Bangkok from 1990 until 96. And at first, it was a real economic miracle. But by the end of that period, it was such a super bubble. I'd become
Yeah.
bearish on it. And the bubble did pop. And when the bubble popped, the Thai stock market fell 95% in dollar terms. And 30 years later, it still hasn't reached its high that it hit on the first day
Right.
of 1994. And the bot crashed. The GDP contracted by 10% the following year. So that's where I learned about economic bubbles and what causes them and how to play them.
Thank you very much, Richard, for being a friend for all of these years. But one more time, we should talk about MacroWatch, how people can subscribe to your very important publication.
Thanks, Robert. So they can find MacroWatch at my website, richardduncaneconomics.com. Every couple of weeks, I upload a new video. It's basically me making a PowerPoint presentation. It usually has 30 or 40 charts. And I explain something important happening in the global economy, like recently the debt ceiling problems in the US and the risk that there's going to be a stock market sell-off pretty soon in the US. But I also discuss China's economy. I discuss the Magnificent Seven in a big series. And I really focus on the fact that credit growth has been driving economic growth and the part that the government plays in creating money to keep this bubble inflated by creating liquidity. So it focuses on credit growth and economic and liquidity because the economy just doesn't work the way that it used to when dollars were backed by gold. The economy works in a completely different way now, and the government tries to control it. So MacroWatch explains in very simple terms how the economy really works in the 21st century. So I think your listeners would get a lot out of this. And again, if they would like to subscribe at a 50% discount, go to richardduncaneconomics.com, hit the subscribe button, and when prompted, use the discount coupon code CRASH for a 50% subscription discount.
Right. And I highly recommend subscribing to it because, like, definition of intelligence, if you agree with me, you're intelligent. I wrote this book here, Rich Dad's Prophecy, and this came out in 2013 or 12, something after the 2008 crash. And I watched what the Federal Reserve Bank was doing. That was Bernanke. And they printed so much money. So that's why Richard and I are joined at the hip there. We're floating on fake money, and we just keep printing it, hoping the bubble stays up. So that's why please subscribe to Richard's newsletter. Richard, thank you for being a friend all these years. And the thing I love about MacroWatch, he uses a lot of pictures, not words. So he has charts and graphs so you can see it in a picture.
Well, Robert, it was you who advised me that I should create MacroWatch 11 years ago. And I did on your advice. And it's been really fantastic advice. So thank you. You've been a great mentor to me.
We're an education service. I don't recommend buying Bitcoin or gold or silver or land or cows and all this stuff. We leave that up to you. But you need to have information so you can make better decisions. So, Richard, keep up the good work, and we'll be back to see how it goes next year. Okay.
All right, let's do that. I look forward to the next time.
Yeah. So I'll be right back with the final words for Rich Dad subscribers. And again, I want to thank Richard Duncan, and please subscribe to MacroWatch with Richard Duncan. We'll be right back. Welcome back. I want to thank Richard Duncan, and then please subscribe to his MacroWatch. He's a lot of graphs and pictures, so you get the big picture very quickly. He's very smart. And unfortunately, we're going into some very rough economic times. But the good news is when there's bad news, there's also good news. You can't have all of it. But to sit there fat, dumb, and happy and pretend your 401k or the stock market is going to keep you alive, I'm afraid that's not going to work, because I wrote this book, I think, in 2012 or 13, after the 2008 crash. And I could see this crash coming. So let me just say one more thing. We don't give financial advice. but we do recommend people study, because money, like it or not, money is a very important element of life, and most people pay no attention to it. Anyway, thank you to Richard Duncan, and thank you all for watching the Rich Dad Radio Show.
This podcast is a presentation of Rich Dad Media Network.